Hello, my name is Karina Alvarez, and this is the oral presentation on the CountryManger simulation. The CountryManger simulation is focused on a toothpaste launch into an international market. So the toothpaste brand name is Allsmile, and I chose to enter Chile. Now, there's several reasons why I picked Chile. While it is smaller in population when compared to Brazil or Mexico, for example, most of its total population, 89%, reside in urban communities. And that translates to 99% of those people um, having access to drinking water. Now, while that is not something that is a criteria for purchasing toothpaste, it's definitely a piece and very necessary to brushing your teeth. So, again, the population of Chile is 17.3 million, and this is based off of a 2014 census. Chile has a growth rate of 0.84%. They have a high literacy rate. Their GDP is $376 billion, and the growth GDP is 1.5%, and inflation is at 1.6%. Now, these are all factors that I took into consideration and I looked into before determining what country I wanted to enter with this toothpaste line. Um, for me, I wanted to be sure that I was entering a stable market, that I had a demographic of people that are interested and knowledgeable when it comes to dental hygiene, and that they had the capacity in terms of financial capacity to purchase maybe a specialty toothpaste such as whitening or kids line or so on. And then just in terms of the exchange rate, every US dollar is about 502 pesos according to the CountryManger simulation. So now, as you know, I shared some of the facts on the country, and then the regional marketing plan was, after evaluating and diving more into details, is to have Osmile enter Chile with a focus on the younger population as they were growing the fastest. Um, Introduce medium-sized paste into the market, as those are the most popular in Chile. So when looking at its competitors, the competitors in the toothpaste arena, um, I wanted to. I wasn't. I was aiming for a best value strategy. I wasn't aiming for a differentiation strategy. I just wanted to um, have my company be part of the competitive marketplace. So with that, we had to adapt an advertising campaign and create a new one during the first year of entering Chile. This was all part of the marketing plan. And after being in the market for 2 years, I wanted to create a new campaign focused on the younger population interested in whitening paste. Again, this is more of a luxury item versus a necessity. And then obviously to set competitive prices and have a big, strong sales force that would increase the Osmile awareness brand. So all of this was part of the regional marketing plan, along with some other items that came to fruition along as the simulation went on. Now, with the Salesforce, this was a piece that at the start of the simulation, um, I was a little bit conservative in determining the amount of people per um, area. And then as the years went on, I was more aggressive and wanted to be sure that not only was there awareness on the toothpaste, but there was also accessibility to the toothpaste. So now this goes into and shows the performance objectives, and here, I mean, ideally the performance objectives, and as you know, anyone would dream, is that you have a positive um, net profit, and that you are loved by all of the consumers, and your product sells really well. So this is where we started in round one, and then where we finished in round four. I'm very pleased with the results in terms of unit sales. You could see a steady increase. Um, you know, and I'm hoping that this would continue as the years went by. this goes into the return on marketing, and this is great because it's showing that all of the marketing dollars that we put into establishing new campaigns as well as adapting previously existing campaigns um, didn't go by without notice. You could see that this is a positive upstream for the percentage in marketing. And then the brand's equity. This is a number that it wasn't as steady in going up, but we finished the simulation with a 40, a brand equity index of 40. Um, so while not extremely high, it still went up in a positive direction, and I think with time would continue to grow. So some of the key success factors that attributed to the charts that we previously saw, um, that wasn't part of the regional marketing plan at the start of the simulation, is that we determined that a local plant would be the most cost efficient way to produce toothpaste and distribute it. So we brought in a local plant, and this was with the idea that um, as a company we didn't want to pay and spend dollars in shipping and tariffs and so on. And while among some countries those costs are waived, it may not be the case with all countries. And then so having the local plant was great and really helped us get a handle on the inventory and on the capacity, which of course at the start of the simulation, you're not sure kind of how much of the market share your product will get because you're competing among other toothpaste that are already established. So I feel that we did a great job by having by going out so strong in numbers in terms of sales force and marketing campaign. We were able to attract a lot of consumers and take on a larger market share. Then again, to the marketing campaign, really analyzing the demographic and finding an area where there was the most amount of growth. And I saw that within the younger population, and then focused on kind of the luxury type of toothpaste, so the whitening. There's also areas, with children. Children always want products, and if they're packaged and branded properly, this I see this as an area of opportunity and growth. And again, finally, a factor that I previously mentioned is the sales force. So understanding how are consumers buying? Are they going to a store? Are they going to a hypermarket? Are they buying on the web? At the start of the simulation, the percentage of people purchasing on the web was very low, but there was a growth factor there. So allocating the resources so that as the demand for web purchasing grows, the manpower is there. So I feel that I left the company positioned for the future in a very positive way. While the first 4 years were investment years, the company still had a brand equity index of 40. Again, a lot of investment was done, and the plant has plenty of capacity to grow for another 5 years. So while sales are about 11 million units, the the plant is able to continue producing at a rate where they can respond to the demand of toothpaste as it grows, of all smile toothpaste as the demand grows, and really hopefully not tap into um, second shifts, so that all of this is being done in a first shift at a lower rate, or at an average rate versus at a overtime rate. So with the capacity, there's forecasting and sales forecasting that was part of this, and really looking into the future and forecasting for the future. So while at the moment it may seem that it was too much capacity was ordered, in five, it takes time to build and to implement. So I feel that it was fine. So in the coming years, with a strong marketing campaign, I feel that the company will eventually turn into a cash cow, because consumers will relate to the product. There's brand awareness. The pricing is very competitive, and the quality is very good. So again, going for the best value product. And then eventually, I mean, depending on where the company is 10 years from now, maybe they're ready to export toothpaste to nearby countries. So some conclusions and takeaways um, after doing the simulation is that when entering a new market, many times the first several years are investment years. So being okay with that, knowing that many times there are different levels of wins, and many times it's not just bottom line net profit. While of course you need cash and you need money to pay your employees, and to pay your bills, um, you need to kind of have a padding and understand that uh, investing in marketing is as critical as investing in a plant. So it will take a couple years before companies see a big return on their investments. Investing in a local plant is a strong marketing campaign, while costly, is beneficial in the long run. Also, having that localized presence and being able to control the product is, I feel, is a great thing. Also, a big takeaway is analyzing the demographics and being aware of the political and economical situation of the country before entering the market. As the years went by, when comparing my results to other countries like Venezuela, countries like Argentina really had dramatic ups and downs. And, when entering into a new market, that may not be, that's very costly and may not be the best approach. So for me, this was one of the main reasons I chose Chile, because I felt that it was very stable. And not having a lot of experience in the international market, I was looking for that. I wasn't looking for a big risk. And then finally, understanding the consumer trends advises the investments. So again, going back to the example of a traditional store versus web-based buying, you know, here locally, we've seen Amazon kind of take over, and I think that um, this simulation kind of alluded to that as well, because while it was a point, I think it was 0.3% of the population was purchasing on the web. As the years went by, that number kept growing, and at the end was at 3%. Those are the conclusions and key takeaways from the country manager simulation focused on Chile. Um, Overall, it was a wonderful experience, and the learnings and the takeaways were wonderful. And entering an international market really is complex, and dealing with exchange rates and different cultures um, is something that, as part of the marketing campaign, all managers need to be well aware and execute them properly.